Hello and good afternoon. My name's Kevin Igoe from PFP, and I'm pleased to welcome you all here to today's webinar concerning nudge letters, which HMRC are issuing with great enthusiasm at the moment. I've been delighted to be joined by John Hood of Kingston Smith, who has previously spoken to us on an investigation theme as well. So welcome back, John.
Yeah, hi Kevin. Thank you very much. Yeah.
If I could ask you firstly, just introduce yourself, John, and a little bit about your background.
Yeah, hi. So just to give you a bit of background, I originally came from the dark side. Sorry, I mean HMRC. 23 years ago I left and have specialised in dealing with all types of tax investigation, whether it be tax evasion, tax avoidance, or corporate inquiries, PAYE, basically where there's a contentious issue, how to assist clients to resolve matters. And obviously one area that we specialise in is voluntary disclosures, which has been a big part of the tax dispute marketplace since 2007, when they started with the offshore disclosure facility. So yes, voluntary disclosures are a big thing, and obviously that fits in with nudge letters, etc. So that's my background. I'm the head of the investigations team at Kingston Smith, and have specialised in not only advising clients but also advising professionals as well.
Okay, thanks very much. So as usual, if anybody has any questions they'd like to put to us throughout, please put them through the question panel in the normal way, and we'll get through as many as we can. So without further ado, over to you, John.
Thanks, Kevin. So first and foremost, thank you very much for all joining. I'm very pleased to be able to speak with you today about HMRC nudge letters and basically how HMRC are using informal investigations. As Kevin said, very happy to take questions as we go through, and obviously these are just my views that I'm bringing to the table today. You may have a different view, and very happy to discuss with you if you disagree. The idea of today is to basically give you an overview of what I think is going on, and the things that you need to consider on a practical basis to assist your clients and make sure that you avoid the pitfalls that arise with HMRC and how they proceed. So turning now to what we're going to cover, why do HMRC issue nudge letters, which I think is probably on everyone's question list. Is there a statutory requirement to cooperate? Are we? What are the pitfalls? How do we cooperate with HMRC without volunteering information? Do we need to make full disclosure? Is that important, or do we just deal with one particular issue? And what happens in the very odd scenario that perhaps there might be something more serious that's been discovered? How do we deal with that as well? It does happen. It is rare, but it does come to light. How do we as advisors and professionals deal with these particular issues? And I think it's safe to say that we all understand how a tax inquiry works. If HMRC issue an opening letter, we understand that procedure, and we have a framework in which we can operate. So, when HMRC undertake an informal inquiry, how do we protect ourselves and protect our clients? More importantly, to make sure that everything is dealt with in the best possible way. Making the right decisions at the right time is really key, I think, in my view. Obviously, in the last 3 months, I've seen nudge letters being issued for individuals that have assets in Italy and India. I'm not going to say that HMRC are going through the alphabet, but you can reach your own conclusions on that. But most of this has been driven by data which has come out of the Common Reporting Standard. So how do we deal with this? What's HMRC's purpose here? Well, Kevin was talking to me earlier, and he mentioned that HMRC have had from their perspective, a good take up on the number of letters they've issued, which has resulted in tax being paid over. And I think that's the key issue, really. HMRC has limited resources. I mean, the past 12 months, it's needless to say, it's been a really difficult time for both professionals and also for HMRC. You know, they've got a lot of their resource allocated towards furlough fraud. And so, you know, they've had to use their resource in the most intelligent way that they can. And they just literally do not have the resources to undertake formal inquiries into all these issues. So issuing a nudge letter, which is basically an intervention, you know, encouraging the recipient to disclose whether or not they have a tax problem to HMRC, is a really smart way from their perspective to generate some yield and recover taxes that are owed for earlier years. Obviously, the bigger problem that HMRC has now is that as it moves more into the digital world, that the volume of data that's received has basically grown so rapidly that they haven't got the resource to go through everything and undertake, you know, individual investigations. If you consider that HMRC works now using its data mining software, Connect, they can identify on a macro level, you know, on a national level, what's going on. And also they can do it on a micro level as well. They can identify individual issues. And basically, the amount of data that they've received, certainly under the Common Reporting Standard, which is the automatic exchange of information with other jurisdictions around the world, has created a problem for them. They've got all this data on offshore assets, and they need to find a way to identify cases where there's definitely tax at risk, cases where there may be tax at risk, or cases which are just not worth them pursuing any further. And nudge letters fit into that middle category. They allow them to check whether or not there is any tax owed for earlier years. They obviously have the worldwide disclosure facility and the digital disclosure service to allow people to make disclosures. And this is the way that HMRC feels it allows them to use their resources in the smartest way. So HMRC's strategy is meant to be that the information they hold suggests that there is tax at risk. Now, I'm sure advisors may say something different to that and think that, you know, HMRC have just been issuing the letters without actually checking any records. But my understanding is that they are trying to check the information that they hold to see if there is tax at risk. I think one point to raise is that if HMRC were to check someone's the recipient's tax record and see that there might be a problem, they're going to take the more cautious route, which is to issue a nudge letter, check to make sure that everything's okay, and if there is a problem, obviously suggest that they use the WDF. So I think if you bear in mind that HMRC effectively know that they aren't going to get taxed on every case, but they need to double check anyway just to make sure, you can understand why they are using the nudge letters to force this. Just to be clear, I'm not suggesting that HMRC's approach is correct, and I do appreciate that if you believed your tax affairs were in order and you received a nudge letter, it could cause you a great deal of stress and anxiety. It may cause you to, you know, approach your tax advisor, and, you know, we may be on the end, advisors may be on the end of difficult conversations where, you know, the client wants to know why they've had this letter when they thought everything was okay. I do appreciate all of those points, but HMRC's perspective is they feel that if they double check to make sure that if there is a liability, then, you know, that's the best thing for them. I think the other thing to say as well is that HMRC has adopted this policy of encouraging people to check their tax affairs and make sure that they're tax compliant. Now, it does fit in with the first point there about, we were mentioning about resource. That's a big issue, but also, you know, encouraging people to check is good because it allows HMRC to make sure that people are paying the right amount of tax, and also even if there is no additional tax to pay, at least that they can show that they have looked into this. The amount of data that's been provided under the WDF is immense, and I suppose almost HMRC have created their own problem. That they were pushing for this information, and understandably the UK has been at the forefront of the automatic exchange of information. But with the limited resources that are available, how do they use that information? So encouraging people to check their affairs and focusing on the more hardcore is probably a practical and pragmatic approach which HMRC has taken. And as I say, really this allows them to reserve their resources for compliance checks to the more serious cases, and allow HMRC to bring in the tax that's owed. So from looking at this objectively, I think it's understandable why HMRC are doing it. Looking at it subjectively, if my client was in receipt of one of these letters and they hadn't got anything wrong, I completely understand that this can be, I'm not over exaggerating by saying it can be earth-shattering for them, because some of the words, the language used in the letters does cause a great deal of concern. And that's something that we as advisors have to cope with. So is there a statutory requirement to cooperate?
John, if I could just come in with the questions there on that slide. You spoke about the triggers that initiated a nudge. Wendy's asked, will they ever be random, these nudge letters?
I don't think
always be based on information.
There must be some data that HMRC's got to act as a catalyst to cause the letter to go out. I don't think they just issue random letters, as far as I'm aware. I haven't been informed of that anyway.
Okay, from Gareth, are agents going to be copied into nudge letters, for example, like the self-employed income support scheme?
I think HMRC have said that they would issue them to advisors. Yes, as far as I'm aware, that nudge letters are going out to the advisors. I mean, obviously, it's important that the client sends it out, sends a copy to the advisor as soon as they receive anything. But my understanding is that the letters are coming to advisors. Yeah.
Okay, certainly what we've seen on the self-employed income support scheme is then on that particular, they're not tending to go to advisors because, of course, they excluded the advisors from being involved.
Yeah.
Okay. So Tom asks, is all of this just a phishing exercise then?
I think that's a really good question. Is this just a phishing exercise? I think obviously HMRC have got some reason to believe that there is tax owed. And phishing exercises used to be that HMRC had identified a risk rather than had some actual data, and they're just basically looking at the individual and said, okay, there is a risk that they owe tax. There is a possibility, I suppose, that they might say that someone's profile means that they could have overseas assets, but my understanding is it is driven by the CRS data, most of the letters, and certainly all the clients that I've spoken to have had, overseas bank accounts, which would have triggered HMRC's interest. So I don't think these are phishing exercises as such. It isn't just, oh well, we've done our risk analysis. They are, as I understand it, reliant on the data. Now that could be that I'm only seeing letters where there is a problem, of course. And as you mentioned earlier, Kevin, if there are a lot of people that have received the letters but don't have a problem, and I don't ever speak to them, that might explain that HMRC are just using risk profiling to identify people, and those are phishing exercises. But certainly in my experience, I haven't seen anyone that's had a letter where there is no reason for the letter to have been sent out in the first place. There is always an overseas asset, a financial asset, which would have triggered this.
Okay, thank you. I think in our experience, I guess we see a lot across the spectrum, but yeah, we've certainly seen a number where the information hasn't been correct, or they've just issued a scattergun approach and it has been declared on a return. They just haven't checked the return.
I think that's a really good point, because, you know, as I said, HMRC, when I've spoken to them, have assured me that they have done some kind of compliance reviews to see whether or not there is a problem. But I think, going back to what I said earlier, if there is any doubt, they would rather issue the nudge letter and see what response they get, rather than make an assumption. You know, if inspectors and officers are trained to not presume that something is correct, but to presume that if they can't reconcile it completely, that there may well be other issues to consider. You know, so I think that kind of explains why there could be situations where, and I agree, where people have declared the income, but HMRC just haven't been able to reconcile it to the tax return.
Yeah, we've had quite a lot of feedback on whether agents are mentioned, John, or agents are copied on the letter. I think a general consensus is that they're not, they don't seem to be getting these letters.
Right.
I think as a general rule, it seems to be a rule of thumb, unless the letter, you do get a letter, then I wouldn't assume it hasn't been sent. And I suppose it's important that clients are told to refer to you if they receive anything from HMRC.
Yeah, I mean, obviously, I think a lot of the problems that, you know, I'd say as well is that a lot of the time HMRC issues a letter, and when they do contact us, they send a letter. The client sends us a copy of the letter straight away. So that might be why my impression is wrong. But so yeah, I know that the idea is that the letter has to go out to the individual for them to consider, rather than just sending it to an agent. So yeah, I stand corrected on that one. Yeah.
So Nicholas asked, do nudge letters also take the form of pre-populated sections of tailor your tax return?
Sorry, Kevin, can you read the question out again?
So yeah, do nudge letters also take the form of pre-populated sections of the tailor your tax return?
I must admit, I don't quite understand the question, Kevin.
Right. Okay. Okay. Well, let's come back to this.
I'll cover that one later.
Yeah.
I mean, I think the nudge letters are driven by the data. If anyone has, if you mean, have they put any further information on the tax return? Is that generated?
I think you might be referring. You know, now we get the tax return, that the revenue get information like your employment income and stuff like that. That when you go in to complete your tax return, it's on the system. Is that sort of thing?
Oh yes, yeah.
Yes. Yeah.
Yeah, I mean, I have seen an interesting scenario there where the information that HMRC had on the system was not correct once, and that caused a problem. And also data that was omitted, which should have been there. So I think that's a good point. That could cause letters, but my understanding is at the moment the nudge letters are being driven by the CRS data. Nudge letters on R&D and other areas as well, so it's not just limited to offshore assets, obviously. Yeah,
that's what. Yeah, John just makes that point. Was that, what about other nudge letters that aren't CRS disclosures? Are they issuing them? Well, we're certainly seeing them on furlough. We're seeing them on self-employed income support scheme, that type of thing at the moment.
Yeah, I mean, I've seen quite a lot of you know, R&D seems to be a growth area at the moment. And then, yeah, as you say, the SCISS and furlough, they are writing out as well. Obviously, those letters have you know, each area has its own consequences. You know, and I think this is kind of feeds into the point I'm making on the slide now. You know, is there a statutory requirement to cooperate? And while obviously, you know, the letters are informal, HMRC still has the power to follow up if there is no response received or they're not happy with it, and they can either make a discovery or ask for information. So yes, this is one of the dilemmas with these letters, to encourage people to check their tax affairs. That, you know, is it a softly approach, or is this just, you know, one way of you know, using a scattergun approach to recover tax?
I mean, certainly years ago they were issuing nudge letters, weren't they, on banking interest that was on ISAs. They weren't getting the right information.
Yeah.
Okay, great. Do you want to crack on?
Yeah.
Time's marching on. Thanks.
Yeah. So, is there a statutory requirement? Well, there is no statutory requirement to cooperate with the original letter, with the letter, but obviously they do provide the certificates with the options in some cases. And how do you respond? Well, I think it's important that if your client receives a letter, that a response is sent in. And I think the best practice, really, to keep it very simple, is for the advisor to respond. They aren't signing the certificate, which could be later used, against them. It allows the advisor time to check the information and find out what's going on. And I think if you engage with HMRC and if you need more time, because they do suggest, I think normally about 30 days to respond, or maybe a bit longer, depending on when they send the letters out. I think the best thing to do is to for the advisor to take over and not for the taxpayer to respond themselves, the client. I think putting that layer, putting you as the advisor as an umbrella to protect the client in the way is a really good way of minimizing their exposure, because ultimately I think although there is no statutory requirement to respond, if you don't respond, obviously HMRC does have its information powers, which are statutory, and also discovery assessments which they can raise. So I think this is they are basically trying to work out which cases they need to follow up on. And if there is no response, I think one way or another, it might not be immediate. I mean, at the moment, we know that there's huge amounts of resource allocated to furlough, fraud, and the self-employment income support scheme fraud. So there is going to be delays, but ultimately HMRC has the power to chase this up at a future date. So what do we need to be aware of? Well, I think first and foremost, I think it's the general consensus is that don't ask the client, or the client shouldn't sign the certificate and provide it to HMRC. The reason being that if the client did sign it with the aim of cooperating with HMRC, but just didn't understand the tax affairs properly, which, to be honest with you, the UK tax code is one of the most complex in the world, so it's quite easy for someone to make a mistake or misunderstand what they needed to do. Ultimately, if there was a signed certificate and HMRC would find out that it was, they could consider whether or not to undertake a criminal investigation. Now, that is absolutely the worst case scenario, and I'm not suggesting that HMRC would do that in every case, but there is a risk. So however we can minimize that risk is really important. So I think, certificates, they're all very well and good, but I think it's better that we as the advisors respond and into communication with HMRC. Also, making sure there's a full disclosure. Now, the client might say, well, look, I've only got an offshore bank account and there's nothing that, there's nothing in there of any interest. But, HMRC may want to know about where the money came from that went into the account. And also, what is that money used for? Where did it come from originally? If it's has it come from UK savings which have been taxed, or from another source? So care needs to be taken to make sure that if a response is sent in, that it is complete and correct. Again, otherwise, HMRC do have the facilities to undertake a more serious investigation. And I'm going to talk about that a bit later on, because as I mentioned, the last point here is tax evasion. If HMRC consider that there has been some attempt to evade tax, then the implications for the client are serious. So I think it's really important that, and it goes without saying really, to establish how and why any tax liabilities arose. Understand the background fully as to what happened. Make sure that if there is any assumptions or methodology applied when you calculate the tax liabilities or penalties, etc., that it's all recorded clearly. So if there were any questions, that HMRC ask on submitting a disclosure, that that can all be explained correctly. One of the things that obviously that I will do is normally in more complex cases is to send in a letter to company disclosure, just setting out all of these points so it's clear to HMRC. Now, I know that doesn't automatically mean if you submit a covering letter that will be linked up with the disclosure. You'd hope it would be. And I have had a case where I had 2 investigators looking at the same disclosure at the same time. So mistakes do happen, but most of the time, if you do submit a letter covering the issues, the more complex issues, that does assist HMRC to tick off their list of questions. And I think one of the other things that I would say is, think ahead as to how HMRC would possibly review that disclosure. What are the questions that would arise in your own mind as to, what are the weaknesses of our arguments, if any? What points may not be clear from the disclosure that's been made? Because after all, if you make a digital disclosure, the amount of space available for you to provide additional information is very limited. I mean, it was the WDF system as we know it was only designed as a temporary system, and then basically became the formal system for these disclosures. And so, there is there is an art to making sure that you tick all the boxes and hopefully make a complete disclosure as best you can. And I think then the next thing to be careful about is, as we say, be wary of cases where there may be tax evasion, because HMRC's informal inquiries. Now, I suppose one of the things to be wary of is that if the funds that went into the offshore bank account came from the evasion of tax in the UK, there are serious consequences for that. And I'm talking a bit later on one of my slides about the penalty regime. So it is really important that you identify exactly what happens. I mean, HMRC's penalty regimes are all based on behaviour, but what led to the problem arising? Was there knowledge? Was it clear? What actions were taken? What are the circumstances which led to this liability? It's really important that the numbers are key, but also what's the background, what's the colour to how this problem arose in the first place. Checking that out and making sure that you understand that fully, and basically, dare I use the word, critically analysing the information is really important to make sure that sometimes we as advisors have to ask obvious and perhaps blunt questions just to protect our clients, and I think that's really important when we are actually doing it to minimise their exposure, which is really key. So yes, asking those difficult questions at the right time is really key to getting this right.
Okay, before we go, we've got a few more questions. John, you mentioned about the signed certificate. We've had a few questions in on a theme here. Firstly, is this a statutory certificate that HMRC can insist that you sign?
I don't think that certificate, I mean, basically that's just to say whether or not there's a problem. I mean, that isn't statutory. There's nothing in the legislation about that. I mean, obviously, if you made a disclosure and you have an investigation and they ask you to sign a certificate of full disclosure or something like that, that's a different matter. But the certificate that accompanies the letter, I don't think is statutory, and I don't think anyone, in the general consensus, is that it is statutory at all. Yeah.
Okay, thank you. A comment from Gordon. Are you suggesting that a clean offshore account that has no tax liability should be disclosed, and an explanation given for it giving no tax liability provided in response to a nudge letter?
I think that if you don't respond to that nudge letter, the issue is, are HMRC going to pick it up later on to ask questions? It's a difficult one. I don't think there's a black or white, right or wrong approach to take. If the risks and the client understands the risks that if they don't respond, HMRC may ask further questions, I don't think that's wrong. I think the policy that you adopt is, as long as you're consistent to some degree, that helps with HMRC. If your firm's policy is not to respond, you can do that. I mean, my view is that if you do receive a nudge letter, it's better to respond saying, well, we don't believe there is an issue, simply because at a later date, are you just merely kicking the can down the road, and inevitably there will be something raised at a later date.
Okay, thanks. A question from Nikita. If another inquiry arises, i.e. a discovery, after the nudge letter, will this be regarded as prompted? And how will penalties be looked at? I think you're coming on to penalties, but will it be considered prompted?
I think, you know, certainly in my communications with HMRC, I think they make it clear that if they've issued a nudge letter, then it is prompted. So I think irrespective of whether there's an inquiry that follows, it would still be prompted. Yeah.
Okay. Nigel asks, are the letters sent regardless of the size of error that HMRC perceive?
I think the problem is that the data HMRC has received under the Common Reporting Standard is not sufficient for them to identify whether or not there is a loss of tax. All they can identify is that there is some transactions that have taken place. You know, the CRS data is limited to some degree. And I think also HMRC have had problems with the data as well, from what I understand, you know, in terms of the format it's been received in and whether or not they can analyze it. But I don't think there is like a de minimis limit on how much is being looked at. I mean, obviously, if they do see a case which they think is almost certainly the data shows that there has been tax lost, you know, they may pick that up for a more formal inquiry, whereas cases where they think that there may be tax lost have been used for the nudge letters, as I understand it. Yeah.
Okay, thanks. Is the client able to request the information HMRC holds to enable a complete response?
Sorry, Kevin, can you repeat that?
So if you get a nudge letter, is the client able to request what information HMRC holds?
Well, I think that's a very good point, actually. I think if they were to consider that there was an issue, you know, this goes down to this point about cooperating with HMRC versus volunteering information. Is it reasonable if they send out a letter to ask what data they hold? Now, the letters do normally give some indication as to why the letters, the nudge has been issued. But I do feel that, you know, it wouldn't be unreasonable to ask HMRC. It would never do any harm. Whether HMRC are going to comply, I mean, the dilemma you have is that HMRC would say, well, look, we don't have to give you disclosure. We want you to tell us what you know, and we'll then check that against our records. But if there was a real issue about whether or not there's a liability, and you were to explain the situation to HMRC, and they were still to refuse to give you any info, then I think that, you know, you've done all that you can to protect the client's position. And if HMRC just aren't happy, then that's up to them to decide how they want to go forward. But yeah, I don't think it would do any harm. And in fact, it's a smart move, in my opinion.
Yeah. And at the end of the day, John, if they're going to raise a discovery, they've got to tell you what it is in any event, haven't they? So
yeah,
not a lot of point in them playing silly buggers, as it were. Right, is there a defined set of taxpayers to whom these nudge letters are being sent, or could it be to anybody?
I think it can be. Literally, it's just based on the data they've got. I mean, as I've seen it, it's not. There's not falling into a particular wealth of taxpayer or rate of tax that they're paying. I mean, obviously, you know, HMRC would argue that perhaps if you're a basic rate taxpayer, you possibly might not have assets overseas. But even then, I don't think that's entirely correct, because I've seen some cases where the individual has only just literally gone into the higher rate. So I definitely think that, you know, it gets issued based on the data rather than any kind of profiling of the type of client.
Okay, great. Thanks very much.
Okay, so cooperating with HMRC versus volunteering information. So I think that the question about asking HMRC what data they have is a really important one. And I don't think it does any harm to ask that. I mean, if it's not obvious when the letter's received to the client, then definitely I think it's worthwhile engaging with HMRC. Whether, I mean, the only thing I would, word of caution is obviously, you know, getting hold of someone may be quite a difficult task. But I do feel that, you know, it's always worth engaging with HMRC in any form of life. if you ignore something, the reaction is normally a lot worse than if you attempt to engage and resolve the matter. You know, the worst, if you can imagine, if you're dealing with an individual and they ignore you, that normally strengthens your resolve to look into the matter rather than to just go away. And HMRC are very much of that approach as well. They would consider that if you ignore something, that it's not just because it's not worth looking into, that it's because there's perhaps something being hidden. And you know, you may say that that sounds very cynical, but then you know their job is to recover tax that's owed, and they are, you know, if they assume the best in every case, there wouldn't be any, you know, the black economy and the hidden economy would be growing rather than reducing. So I think, you know, that kind of explains why, you know, they're taking this approach. I think, you know, as I said, if we don't cooperate and volunteer information, you know, ultimately HMRC does have the power to ask for the information or raise a discovery assessment. To some degree, if you got into a case where there was you know, the client didn't think there was anything wrong and HMRC refused to cooperate, you know, actually saying to them, well, you know, you don't want to tempt fate by getting them to take the worst case scenario, but certainly, you know, ultimately they'd have to raise a discovery assessment. So as you said, Kevin, it's deciding the right time to bring that up for HMRC and say to them, well, look, you know, ultimately you're going to have to tell us. In other words, how otherwise we wouldn't be able to appeal against any assessment, etc. So you have to disclose at some point. And also, you know, the discovery regime does give protection. There are safeguards, and the legislation does protect people. You know, if there is information on a tax return, HMRC have ignored it and then decide to raise a discovery, you know, there are some protections. So I do feel that, you know, whilst informal investigations are really tricky, that cooperating with HMRC and basically, you know, one of the things I'd always say to them is, well, you know, what powers would you use to pursue this matter if we're unable to resolve the matter? And so getting HMRC to set out what they would do if you get to that stage would be key, because then I think it shows you're not just volunteering, you're actually providing information to HMRC to avoid the formal powers being used. But I definitely think that each case has to be considered on its own merits, and there's no right or wrong approach, and you have to be pragmatic and work on the best approach for that particular client. So I've mentioned full disclosure before, but I think one of the things that I would mention is that I have seen cases where people have provided information to HMRC and there has been confusion around bank account details, etc. So making sure that the disclosure is complete, and if you do provide information, making sure that, you know, the information provided is accurate is key. So if, for example, if you would say, oh no, our client only has one offshore bank account, and because of the fact that that was the only account that had been reported under CRS, but then at a later date another account was to come to light, HMRC wouldn't assume that that was a genuine mistake. They would look at on that pretty poorly. So I think it's really important to make sure that there is a full disclosure. So even if something doesn't have a tax liability, it may well be worth mentioning it to HMRC when you do disclose anything or talk to them, just to cover it off and show that you have considered it. So just for an example, a client the other day said to me that he'd received an inheritance. Now it's not relevant to UK tax, the money that he received, but we would still disclose that it was an inheritance because we're quite comfortable there is no tax to pay, and we feel that it's valuable information to HMRC to explain the source of the money. So I think that, you know, giving a full disclosure and you know, there is a fine balance between giving too much information and too little, and that's something that, you know, obviously you have to consider in each case. But yes, making sure you get that right is really important. And I think also, as I mentioned earlier, you know, you can use you can send in, say not necessarily a report, but you could provide an extended letter setting out, the methodology and assumptions you've used and applied, just to make sure that you give full explanation so HMRC can follow what's happened. I mean, I am talking about cases where you feel that there is a need to do that, and obviously in some cases you might feel that there is nothing wrong, and you could go back to HMRC and say that. But it's just making sure that whatever decision is made, that you understand what the implications and consequences are of that decision, and if it is challenged, that you can back it up. I think that's really important. And then obviously, I think one of the things that we have to consider is, worst case scenario, the client turns around and says, oh yeah, that bank account I've got, the money that's gone into it, it's come from the UK, or it's not been declared, and I knew that I should do that. What are the options available? Well, I mean, obviously, if HMRC were to identify that there was tax evasion involved, the offshore legislation now does have like a strict liability offence, so that has to be considered for post April 17. I think also that we need to consider that in some cases it might be worthwhile making a disclosure under the contractual disclosure facility just to get the client protection from a criminal investigation. Does it happen very often? No, but making a voluntary disclosure using that facility may be appropriate. I think one thing that I would always say to be cautious about is that, if the client says to you and accepts that they've done something wrong and it is evasion, although it's a difficult pill to swallow for the client, the best route really to protect them is to deal with this on a civil basis, and to settle it with HMRC. Now that really does depend on the issues that you've got to consider and what actually happened. But if someone has tried to disguise what's happened and or conceal what's happened and try to hide assets overseas, is the right approach to use Code of Practice 9 and the contractual disclosure facility, rather than using the WDF and then it be found that there is a problem. There is no kind of set procedure you can follow to decide which is the best route, but certainly worthwhile considering that in a very small number of cases, I think, if that does come to light. And unfortunately, this is the fact of life, that these things do arise. I think also, as I said, you need to be cautious about the strict liability offence for offshore assets. Also, we have the asset-based penalty for offshore tax as well, which can be applied. That's another issue to consider. And HMRC are using that in certain circumstances. And then, as I say, the last point about the offshore asset moves penalty, need to be really cautious of that, because that makes sure that the penalty is even higher. And the other consequence of this, of course, is that you can we have the publishing details of deliberate defaulters program. They could be mentioned there as well, so their details could be published. So it's really important that if there is a more serious aspect to this, that everything is reported in the right way to minimise the client's exposure, because that's the reality of the situation we're dealing with. So in summary, I think we need to carefully consider how we respond, avoid the pitfalls, and in the more serious cases, consider whether it's necessary to minimise the risk of a criminal investigation. And I mention that because this does happen. I mean, there have been informal investigations which have led to criminal prosecutions. HMRC can start asking for information, in phishing exercises, whatever you want to call them, and this can lead to clients facing criminal investigation. Now, obviously, normally if they've identified up front that there's a problem, then they would decide at an early stage to undertake a criminal investigation. But there are situations where, for example, the issue, the tax at risk is not very great, but if someone was to sign a certificate or provide information knowing it was incorrect, in actual fact, HMRC would pursue the criminal investigation based on that action rather than what actually caused the letter in the first place. That's the point to be really careful about here, not to make the situation worse, but to minimise the client's exposure. And I think one of the things just to bear in mind as well is that, these informal investigations, there has been a recent case, JJ Management LLP v HMRC, which went to the Court of Appeal. And basically the Court of Appeal confirms that HMRC is entitled to undertake informal investigations. The HMRC is required to check that the correct amount of tax is paid, and that there is a general duty to collect tax and to manage the tax system. That's basically one of HMRC's fundamental responsibilities. And the Court of Appeal said that, in that case, although there was an informal investigation, that they weren't going to interfere because it was justified. So I don't feel that we're going to see these nudge letters, interventions go away. I think, in fact, probably we'll see more of them. The question in my mind is whether that decision in 2020, I think it's approximately a year ago now, is actually leading to more questions coming to light for and more decisions being made for informal investigations, because HMRC basically has had the support of the courts on this. So I think it's really important to remember that we might see more of these cases, and making sure you get your strategy right at the beginning is really important. One of the things I always say to myself is start with the end in mind. Make sure that whatever decision is made, you understand what the consequences are and you understand where you want to get to, and minimising the client's exposure. I think fundamentally as well, if you do get into situations where there are really complex issues, getting specialist advice is really important, just to make sure that, as I said, making the right decisions at the right time is really key to resolving these matters in the right way. And there is no right or wrong answer. I think we've already established that there is no right or wrong approach. It's very much up to you what you want to do as the advisor, but just make sure that you consider how to deal with that. So thank you very much for listening.
Okay, excellent. We have a few more questions, John.
Sure.
You haven't got away that easy, and done some comments. Do HMRC check the WDF accounts set up and then closed after 30 days before completion?
What, to see if there has been something filed?
Yes, yeah.
Yeah. So I think my understanding is they do eventually, they do check to make sure that the tax is paid, but I think there's a bit of flexibility at the moment. I mean, when we've contacted HMRC, I think they've been pretty snowed under, so I think there's a bit of flexibility at the moment. But yeah, if you registered for the WDF, I think ultimately you have to say you don't have to make a disclosure saying there's tax owed, but you have to say, write to them telling them, well, I'd suggest it's a good idea to write to tell them that it's no longer needed. But it might, that's a good question actually. As a strategy, is it worthwhile making a registering the client as to give them that option, even if initially it's not established that there is a liability?
Okay, thank you. Comment from Keith, well, a comment and a question. It's all very well to say these letters are something we should all just cope with, but does HMRC have a duty not to be intimidatory? Is there likely to be any challenge to that under human rights legislation?
I think it's a very good question. I think that even if there is a challenge, that would be very interesting to see what the outcome would be. My view is the JJ Management case does support HMRC's approach to informal investigations. But I also see that, is there some kind of infringement, interference, because we all have a right to private life under the Human Rights Act. So I can see the point, but unfortunately, I'm a pragmatic person, and I don't actually feel that, if there is a challenge, it may be successful. But at this moment in time, I feel that, the better approach is to try and minimise the client's exposure.
I think one of the defences against that human rights legislation is that if it's in the national interest, isn't it? Raising taxes comes under that.
Yes, absolutely. And it's whether or not there's it infringes on your if there's an infringement of your human rights, right to private life. But I mean, again, that's more of a legal matter than tax. But certainly, I understand the point being made, and I think it's a very good one. I just feel that at this moment in time, HMRC have got the wind in their sails on this, and you could challenge it, but whether or not that would actually have any success remains to be seen, I think.
Okay, thank you. Paul's asked, how do you get around the limitations of the digital disclosure forms? If you refer HMRC to a letter within the form, would that be appropriate?
I think you can do that. I mean, the digital disclosure service is basic, to say the least, and I think sending an accompanying letter to HMRC is a good idea where you've got complex matters. Yeah, and I think you could just mention that in the white space you get on the DDS. Yeah.
Okay, thank you. Gareth, on the subject of the white space, points out his understanding is that HMRC can't see the white spaces on the return, a self-assessment tax return, and have to request it in the event of an inquiry. Which is something I have seen before, in fairness. So John asks, on a very basic issue, if you want to make a voluntary disclosure, to whom do you write in the first instance? So I guess this is not in response to a nudge letter, but in general terms, the client comes to you and says they've got an impression.
Through DDS.
Yeah.
And so I mean, in cases where I've written to HMRC before, I've encountered a significant delay between writing to them and receiving a response. 12 months if you write to them, which is why I mean, I must admit I've attempted to use the digital service rather than writing to them. But yes, it would be to the using the self-assessment reference number, because obviously it's not geographical anymore. You use the self-assessment reference number to make the disclosure. Yeah.
Martin makes the point on this that he's made a load of voluntary disclosures and it varies depending upon the nature and refers to HMRC's website. So thanks for that, Martin. Right, some more comments really rather than questions, but we'll ask them. So Martin says HMRC refers to nudge letters as one-to-many, whereas compliance checks, stroke inquiries, are more of a one-to-one in nature. Karen makes the comment, hi, we received deemed domicile nudge letters about clients. The letters only came to us and weren't sent to the clients at all. Interesting. Martin saw something recently where HMRC will not be looking at self-employed income support errors of less than £100. Claire, I've called on HMRC on several clients and they've always been very helpful in giving us the information and what they hold. Julie asks, is the DDS appropriate for disclosing overseas rental income not previously disclosed but with no tax payable?
I think that's a good question, actually, because do you need to make a disclosure if there's no tax to pay? HMRC say that the digital service is only for situations where there is tax owed. If there was rental income but there was no tax to pay, the question is whether or not you do want to notify HMRC about that. If you've not had a nudge letter, is there any point in telling them? Now, I don't think there's, again, I don't think that I would say that there is a one way of dealing with this. I mean, it really does depend on what the client wants to do. Some clients might say they don't want to wake a sleeping giant by telling HMRC about it. Others might say that they want to take the view that they need to tell HMRC about it so that it stops anything happening in the future. You know, I think it goes on a individual one-by-one basis. Really, you decide, you know, for that particular client, what's the best approach.
Okay, thank you. Ahmed, how long can we ask HMRC for an extension if a disclosure is to be made?
I think HMRC have said that you can ask for a further 90 days. I don't think there's anything saying that there is no further time available. And I think, you know, you can, depending on the scenario and situation, I think HMRC, to be fair to them, in my experience, have been very reasonable. So I think there is normally up to a further 90 days, but you know, if further time was needed and there was justification for that, then I suspect that HMRC would seriously consider it.
Okay.
You know, I think it's again, you know, it's on a bespoke basis really for that particular client.
Okay. Raj makes a point of question. Please bear in mind PCRT. I have a couple of questions that I've had all on fee protection insurance, which I guess I should deal with. So are nudge letters covered under fee protection? The answer to that is no, by and large. They're not, unfortunately. Right, well, thank you for that, John. That was a really useful and helpful webinar. Lots of questions today, which is great to see everybody so engaged, bearing in mind there were around 400 of us registered for this webinar. That's pretty good going. I would say thank you to John again, and thank you to all for coming along. We've put on screen there our UK Tax Investigations Conference, 7th of October. We're going to go digital again this year, as we had so many attend last year. So that's, you know, so please give that some attention. Those of you who are more regular attenders will know this is one of a number of monthly webinars we produce for our member firms and guests. Our next one will be on the 16th of June at the moment, which Chris Gargan, who's from HMRC, who heads up the independent review section of HMRC, so I'm sure that will provide its own food for thought. We will be sending round a copy of the slides to everybody who's attended this afterwards, if you want it. Well, we'll be sending them round if you don't want it. We'll be sending them around. If anybody has any questions, would like to contact John, he has his contact details on the screen. And I would say nothing else, but thank you for listening and speak to you again soon. Thank you, John.
Thanks a lot.